Hello, Inman, and welcome to your next session. My name is Wendy Forsythe. I'm the Chief Brand Officer at Fathom Realty, and Fathom is your sponsor for this session. I've been in the real estate business for a long time, and one of the things that has stayed consistent is the necessity to give amazing customer service to our buyers and our sellers. In today's world, though, that has become even more challenging. And you've heard throughout the Inman Connect conference this morning in particular, and just in general, that there's a lot of new entrants in the business that really want to have a relationship with the end consumer from end to end throughout the transaction. So one of the things that we've been focusing on at Fathom is how do our realtors create that end-to-end experience for their buyers and sellers? And a critical part to making that happen is the relationship between the loan officer or the mortgage company and the title or escrow company that the clients are working with. So on today's session, we're going to talk about how we bring together brokerage, mortgage, and title to really provide an amazing end-to-end experience for today's home buyers and home sellers. So I'm delighted to have a couple gentlemen who are going to join me to discuss this topic, who really are experts and have spent their careers working with real estate professionals and home buyers and sellers to ensure that they have the best possible experience. So gentlemen, I'll invite you to turn your cameras on and join us. And we'll do a quick round of introductions. Welcome to the virtual Inman stage. I think this is the first time each of you are speaking to the Inman community. So welcome so much. Paul, why don't you start with a quick introduction?
Hi, my name is Paul Yurashevich. I run Varin Title. Today I'm sitting in North Carolina, in Cary, North Carolina. It's raining, but otherwise it's beautiful. And I'm very excited to be here. We are a title company that operates in about 20 states and expanding nationally, and looking forward to the session.
Thank you. And Sean, over to you.
Hello, thank you for having me on here, Wendy. Sean Varin with Encompass Lending, president of Encompass Lending. We operate in about 42 states. Excited to be here. Been in the lending and mortgage game for just under 20 years. So I'm excited to be on this.
Awesome. All right. Well, I'm going to wear my realtor hat. So you can see we're like a three-legged stool here representing kind of the three critical functions in ensuring that a transaction happens successfully. Before we jump in, I want to remind everybody that is watching live, if you want to ask any questions or comment along the way, you can do that in the room chat. All three of us have the chat open. So if you see our eyes darting across the screens, it's because we're watching the chat. But gentlemen, I want to come at this from kind of flipping the script, so to speak, on a first question. Because on the realtor side, on the brokerage side, we often complain about loan officers and title reps or escrow officers. So let me ask you guys, like, what frustrates you about working with real estate professionals?
Now, Wendy, you know Paul and I do not get frustrated working with agents.
Never.
Not at all.
There's no agents out there that push it too far, right? They're pushing the limit.
That's right.
No. Go ahead, Paul.
Oh, yeah, it was just, this comes down to, I think the first thought is the value of transparent communication throughout the process. So when we get a contract from the agent, a great agent would tell us, hey, here's the contract, but here are a few things that are not on the contract. Maybe the seller is buying another property right away. So that's important to keep in mind in terms of timelines. Maybe the two sellers don't like each other. Maybe they're getting divorced. So there's considerations there in terms of how we're going to close this property. Maybe they don't want to come to the office for some reason to close. We need to come out there. You do that kind of a service for the client. So those are the communication points that really puts great agents above kind of the average agents in our eyes.
And I would just add.
It's more than just sending the documents over, right? Like we shouldn't just like check that off the box of like, oh, I sent docs, they got everything they need.
Yeah. And I would just add to it, honestly, if everybody would just remember that we all share the same motivation to get to our mission is to get that client to the closing table as smooth and stress-free as possible. And so that mission never goes away. And if we can all understand that and work together, that's the key. It's just making sure, and Paul nailed it, communication is going to be the key, but we all have the same mission. And honestly, if you think about it, we all actually get paid at the same time, right? Like when the loan closes, title gets their money, mortgage gets their money, real estate gets their money, and loan officers have that same sense of urgency to make sure we deliver and do a great job. And actually, and it might be a little biased being in the lending world, but loan officers actually don't even get paid when that loan closes. They could be looking at another week, 2 weeks, or even possibly a month. So I assure you, sense of urgency for them is high on the list.
Yeah. So we're getting some kudos on the chat around transparent communication. We were asked to say that again louder for all the people in the back. But Paul, I think those were great points. Like if there's a divorce, if there's a contentious relationship, if they're buying another property, if there's a situation that may inhibit sort of where they can travel to or meet. Those are all things that I think we as agents could do a better job at sharing and keeping that communication loop open. So I think it's the takeaway from that is we all have to communicate better with each other along the transaction, which is one of the things that we talk about technology and one of the things that certainly the Tomo and Better and Rocket Mortgage and companies like that are saying that they can control. So we need to think about that, as we look at them as competitors and how we compete against them. So let's chat for a second on some sort of tactical things. So we went a little bit kind of like high level with the first question. I want to talk really what's happening in the market right now. So Sean, I'll direct this initially to you. What are you seeing for timelines? Because we as agents are dealing with mostly a hot market across the country. Timelines are we got multiple offers. It's super competitive. What should agents be thinking about and working with their particularly home buyers around expectations?
Yeah, and I think, and it's a great question. I think really what a lot of the agents need to know is know your market, right? We lend in 42 different states, so we're across the United States, and there are third-party servicers right now that can get things done in a week. You get appraisal done in a week, 5 to 7 days. But honestly, in some areas, you're looking at 2-3 weeks before an appraisal can get done. So you really need to know your marketplace. And I would say, look, everything we try to do, we try to set the company or the customer up for success. And, we always say, look, if you can give us 30 days on a conventional, a VA, an FHA transaction, that's setting it up for success. If you're looking
30 days to close, like from contract acceptance to close, when does that 30 days start?
Yeah, that 30 calendars is from contract to close. That's if you're communicating well with your partners, and that's going to be the key, right? You're going to hear a common theme is, the big groups like Zillow, they're creating these packages, so it takes out some of the human element of delays. And so I always tell my agents, even when you've submitted an offer, go ahead and shoot me the copy of it. I can prepare things before we even know it's verbally or executed. It gives me a jump start. So I'd say 30 days is setting it up for success. Be careful on your USDA, your DPA programs, and non-QM. Give yourself more time. If you're doing those transactions and you're setting it up for 30 days, it's not going to be successful. So the key is for all these is communication with your loan officer. I always advise every single one of my loan officers and agents, make sure you have a conversation while you're writing the contract, during, before the contract, so we can talk through any hurdles we might see. Again, marketplace is really going to dictate a lot of that. There's a big variance and honestly, some areas for title as well. There's a lot of constraints going on in this crazy environment. So we got to communicate to make sure we're setting the transactions up for success.
And I was
going to say, that is a huge frustration that we have, right? We get our clients an accepted offer, which in some cases is amazing that we get there, and then we run into timeline problems. So Paul, what would you add to that?
I would just add for cash transactions, need a minimum of 10 days to close. And one thing to keep in mind about cash transactions, it's the buyer can close in cash, but we tend to see that the types of transactions they're a little bit more involved on the title side. It's often non-traditional type of transaction. That's why it's a cash transaction. It could be a wholesale transactions, investors. The sellers often have judgments, unpaid taxes, liens, and all kinds of things to take care of. So don't forget that piece. It's not just about when the buyer can close, but allowing sufficient time for all of those things to play out, because of the complexities often of those transactions.
And if they don't like the answer of 30 days, then there's ways.
That was going to be my follow-up question. Because we know that in a multiple offer situation, sometimes that timeline can be the difference between, getting the property for the buyers and not. So yeah, what if we don't have 30 days to do close, or we need to compete and need to do it all faster?
Yeah, and the key to that is we can do transactions in 12, 15 days, but the key to that is doing the upfront preparation. And, look, consumers are going to the agents and they're going to listen to the agent. So if the agent advises them to get with an originator and give them all your supporting documentation up front, we can really minimize the turn times on that by preparation up front. So, and that means giving everything. It's going to be tax returns, bank statements, credit, really have your clients dive in and do that pre-approval. That'll help reduce the amount of time greatly. And I know it's a competitive market everywhere. So the difference between 5 days could be the difference of getting them their dream home or not.
That's great advice. So at the time of pre-approval, get all the supporting docs that normally we wouldn't do till after, right? We get the pre-approval, we find the property, we get the accepted contract, and then we're like, okay, here's the 100 things the loan officers need. So we could, if we do that up front, we can speed it up. That was just a little subtle jab that there is a lot that goes into to getting everything together.
There is. We apologize up front for that.
All right. See, I really truly am wearing my realtor hat. All right. Well, we always hope it goes smoothly, right? But we know the reality of our jobs and our industry is that there's bound to be some bumps along the road. So when it comes to firefighting, when there's a problem, it usually happens at the 11th hour. And we're
never
all right. We're all on speed dial, but they do usually start with the realtor, right? When the buyer or seller has a problem, it's usually the realtor that gets that first sort of 911 SOS call. So give us some tips on how to firefight collectively as a team working towards that same goal of common or a great customer service.
I would start out by saying, just like firefighters, stay calm and stay in control. That's going to be the key. But when look, situations are going to rise, and they're going to rise because of a multitude of things that could have happened. It could be title, could be mortgage, could be agents. It doesn't matter. At the end of the day, it doesn't matter where it happened. The key is let's get together and figure out how to get to the closing table again, smooth and efficient for minimal emotion. So I always tell everybody, look, as soon as a situation arises, it should be the agent and the originator only on a call. They should be game planning on what the situation is, what are our options, and prepare it. Then you go back and you communicate to the client and your seller's agent or whoever else you want to include in that. But make sure that the agent and the originator have to be on the same page. They've got to make sure that that message is strong and concise, because it's going to give confidence to the seller's agent in this market. A lot of them tend to freak out and they want, this deal's going south, we're going to go take another offer. So you got to be very concise and confident in the information you're giving them. Having the buyer's agent and the loan officer on the exact same page, delivering that message with confidence and positivity is really going to be a differentiator when you're handling emotional consumers or agents. We want to make sure that we're in control, but you do it in a positive manner.
Yeah, and like a firefighter, like calm and in control. I like that.
Control.
And we see problems every day, so we know they're all solvable. A buyer may only do this a few times in their lifetime, and to them, they could panic. It's very emotional. This is a big deal for them. They might be selling another house. So if we don't have that spot on message that to come and with a solution, they'll be unhappy, justifiably so. So often the client doesn't even need to know there are some bumps on the road if it's taken care of properly by all of us in a transaction.
And anything that comes to mind in terms of common bumps in the road that could be avoided if we communicated better or managed the experience in a different way?
Things that we typically see, obviously the originators, we have to do our job and we have to do our things, but, talking to an audience of realtors, I would just please ask that make sure that you're communicating those amendments to the contracts, anything that pops up on inspection, over communicate that. There are a lot of instances we go to closing and we send out a CD and, the client or somebody's like, that's not the proper purchase price. There was an amendment to the contract. And we're like, oh no. And get with the agent, they didn't, just share the information with the title company or the lender. So believe it or not, as crazy as that sounds, making sure that we get those amendments to the contracts, keeping us in the loop of what's going on that side.
Yeah.
I would just add, when a title company sends a settlement sheet a few days ahead of closing for agents to review, please take a look at it. I know it's nice to sit at the closing and really check everything in front of the client, but if there is a problem, it's much harder to resolve it at that point. So check beforehand.
Yeah. So that brings up a great point, Paul. We were talking before we came on live that Qualia, which is a software in the title business that I know that you use at Veris, just did a study that only 1 in 5 home buyers understand all the documents that they are signing at closing. So, the analogy you just gave is you're sitting at the table reviewing docs and there's a lot of signatures happening and, we don't understand necessarily what we're signing. So how do we do better on that? Because that's crazy to think that 4 out of 5 people are making probably the largest financial decision of their lives, doing dozens, if not hundreds of signatures and initials along the way and really don't know what they're signing.
It's avoiding preventable surprises at closing. If everything is tick-tock at closing and all the documents are correct, there's no questions about the settlement sheet, then you can calmly walk through all the documents with the client, explain what it means. The agent is there to address any questions as well. But if the first thing you start looking is the settlement sheet and that's wrong, and then you spend a whole hour just trying to fix it, then you're just not going to have time to even really focus on those other more important documents. So it's being ready and making sure that final piece of the experience is as smooth as possible.
Yeah, for sure. For a long time in our industry, we've talked about the importance of this partnership between mortgage and title and brokerage. I think that moving forward, it's even more important than it's ever been in the past. What should a real estate agent be looking for in, a loan officer, in a title rep or escrow officer that they're working for with their clients? Like, how can we make the better decisions to ensure that our buyers and sellers are really getting looked after by title and mortgage along the way? What advice do you guys give?
Well, the key is building your sphere and making sure that sphere is of quality. And so I've been doing this for almost 20 years. And when I look at the successful agents or teams, what they've built is a focus on the relationship between, mortgage and title and whoever else. And, relationships are not always easy, right? I've been married, almost 25 years, and you have to work on it, right? And so the key we see is, we call it relationship equity, right? Bumps are going to happen. We're not perfect, but we strive for perfection. But when those bumps happen, you can't have a relationship that you're going to think, oh, they're just going to leave me. If I had a nickel for every time a realtor told a loan officer, well, you don't get this deal done, I'm never sending you another deal. Threatening, loan officers and pushing on them to give the answer you want to hear versus the answer that you need to hear. Yeah, you got to work on that. Make sure we're focusing on that. But the key is building it. So it takes multiple transactions. You communicate differently per agents or different teams. I have some that want email strings. I have some that, the wonderful technology of phones, like the millennials that we're dealing with, and even the agents that we're dealing with, they all want text, which is it's a beautiful thing because it's instant. Most people check their text within 10, 15 minutes versus an email could be hours. So it's really vetting the people you surround yourself with, making sure you're dealing with quality people. But, I would just encourage everybody, don't give up just because you have one bad transaction. it's a relationship for the long haul, and it's easier to work and navigate this together and build out whatever process is best for you and your team. That you got to work through it. So I would just encourage everybody, build out that team, because having a package deal, especially in today's world with the heightened emotions and the volatility, that group, I was calling my family members like, I got a work wife, work husband, work. I was like, everybody is that close, and that's how it should be. If you have those relationships that tight, I promise you, it's setting up the consumer for success.
Yeah, I know one of the things when I'm coaching agents, if an agent's working through a transaction and there's a loan officer that maybe is a friend of the buyer's, or sort of the buyer comes to the transaction saying, oh no, I've got my financing all worked out. I always tell the agent, like, call that person, introduce yourself if you don't know them, find out, like, how can we work together effectively? What is your preference? All of those things, like, those are the things that really do provide a much better experience for our customers. Paul, from the title perspective, like, what it kind of seems, and I don't know, maybe correct me if I'm wrong, but it kind of seems like title is kind of the forgotten stepchild in the relationship. Like, we get there last sort of thing. Like, oh, what title company are we going to use? What's your perspective on that we should be thinking about, sort of higher up the funnel of the transaction?
Sure. And I just want to emphasize that consumers today, they're used to convenience, frictionless experience, right? Mm-hmm. So that's what we, as the different parties in transaction, real estate agent, lender, title company, need to provide to them. Otherwise, somebody else will come into our markets and will offering a vertically integrated product, and the industry will move that way. So we need to give that integrated experience that's smooth. And I'm not just talking about the technological integration, which should be there. I'm also talking about a relationship that between the parties where they know how each other operates, they know what to expect at what point. And beyond that, obviously the technology piece, ease of information sharing between the parties, the small conveniences of how do you get the earnest money deposit to the title company? How do we make it the easiest possible for the agents so they can focus their time on more important tasks? Mm-hmm. Or how do we disperse commissions quickly and efficiently to agents? Those are all conveniences for our counterparties, but ultimately the goal is making it really the best end of that experience for the client. So now they're getting the key and they're walking away, they're happy, and they're going to forget all the details, but they'll remember that closing probably. They'll remember the happy moment of like getting those keys, and we should be there with them celebrating at that point.
Yeah, for sure. For sure. Well, great insights. And, I think the other side of that is like, you guys are choosing agents that you work with, right? Like there's oftentimes where you have the opportunity to make referrals and put in a good word for agents. So those relationships do become reciprocal when they're built that way. Let's pull out the crystal ball. Like, it wouldn't be a conversation if we didn't have a little bit of forward looking, like what's going to happen. So what's going to happen in the market? What are you guys predicting? You are boots on the ground, kind of visibility there. What's going to go on with interest rates? What's going to go on with buyer demands? What do you see happening in the next year?
Well, the last 12 to 18 months have been exciting, haven't they?
They've been exciting. That's one way to put it. Yeah. I mean, thank goodness, like, we are blessed, right? As an industry, given everything that the world is going through.
Yeah.
But what do you see in the next 12 months?
And I would just say, we need to prepare everybody for the next 12 to 18 months. The hot topic right now is forbearance. We're at the end of we're at the conclusion of the forbearance and the forbearance options. So we really need to see, how is the market going to react to that? How is consumer confidence going to react to that? We've gone from almost 8 million mortgages in forbearance down to just a little over 2 million. So we're making great strides to minimize, the effect of what we're coming out of the forbearance. We are going to see some uptick in foreclosures, loan mods, things like that. So we'll want to do a really good job in the future of pre-approving, making sure if there's any hurdles that have to come from a lending perspective. But the reason I bring that up is, this forbearance, servicers have had to weather the storm of COVID. So there's going to be, in my opinion, my humble opinion on this, there's going to be some opportunity for them to, kind of see some rate hikes. We've got to get it back to where it's a more profitable transaction. The servicers have paid dearly in the last 12 to 18 months because of the forbearance. That's a whole nother meeting and presentation discussing forbearances. But the key is we know that real estate's first and foremost one of the strongest economy drivers. So I think that there'll be a lot of focus on making sure that everything continues to climb the way it's going. But yes, I would expect an uptick in rates because they have to. At the end of the day, we've got to get back to a more stable and strengthened economy, but they're keeping a close eye on the effects of forbearance. So the next 12 to 18 months will be really, interesting to watch that.
And I would just say,
crystal ball predictions.
Well, the market has been on fire. If we see a return to a more normal market, that's healthy. It's healthy that if the prices are not growing double digit every year, because otherwise it will become unaffordable for everybody. So let's keep it kind of from a longer term perspective. Like if things normalize, that's normal. And let's not, get too excited about that.
But I think we can all remember rates in the 18s and 19s, and to have these rates in the 2s and high 1s and 2s has just been absolutely amazing. But you got to also remember what it took to get us there. So a healthy market is, 7s and 8s and 9s. And I know people are like, no, don't do that. But you actually do need to get to that for the national economy, for your 401ks to continue to grow, and things like that. So we just got to put everything back in perspective. The 2s won't be around forever.
Perspective is an interesting thing. All right. Well, gentlemen, the relationship that Brokerage Mortgage Title has, as I said at the top of the session, I think is going to be even more critical moving forward. I can validate for both of your companies, our Fathom agents work with both of your companies and your loan officers and title reps and have just amazing experiences. And I encourage everybody that's watching us either live or, listening on the replay to reach out to these guys and, start to sort of investigate, like, am I working with the right, team around me, and what does the extension of my team look like when it comes to mortgage and title? So Paul and Sean, can you guys tell us where folks can reach you?
I just typed my email into the chat, paul@veristitle.com.
Okay, and your website?
At veristitle.com.
Veristitle.com. All right.
I'll also put mine down there, but you can reach me at Sean@encompasslending.com. And you can also just go directly to the website at encompasslending.com. All
right. Well, thank you, gentlemen. This has been a great session. And thank you, Inman, for having us, and everyone for joining in and watching.
Thank you, Wendy.
You can reach me at Wendy@fathomrealty.com, and our website is fathomrealty.com. Thanks, everyone.
Thank you.